They're the transfer agent. VStock is a very large transfer agent. We've got well over 350 stocks on our marketplace and on many others. And they were the transfer agent for Helio. I'm sure they have a lot to talk about and share their experiences with the transfer from escrow to the TA, but also some of the other services that they provide. So I want to turn it over to you and
Thanks. Well, thanks for the opportunity. My name is Seth Farbman. I had the opportunity, I co-founded a company called Vintage Filings. So we service a couple thousand public companies on the SEC filing side, which has given us a good opportunity to experience the Edgar filing component of the Reg A world as well. And then on VStock, historically we had focused on OTC companies and NASDAQ IPOs, and then fortunately sort of fell into the Reg A markets. We are considered experts in the Reg A because we've done one more public company than everybody else. The only one that's happened, which is Helio Motors. Yoel is my better half and the brains behind their operations. CEO, handles everything and all things compliance. And
all right.
take it over.
So that's too modest. My background is I'm a securities attorney. I represented tons of issuers, also represented the investors. I've been all around the industry before getting into VStock. So I'm personally a securities nerd, I guess. I happen to love Reg A. It's another tool. It doesn't replace anything. It's just another tool, another mechanism that companies can use. I mean, 5 years ago when everybody was talking about crowdfunding, you had everybody popping up, wanted to be the next crowdfunding expert. It just took the SEC, 2-3 years to actually come out with the rules and regulations. So we were very excited when Reg A came about. We're also very excited with the final rules that came out because, you know, part of the crowdfunding and the Reg A exemption requires companies who raise money to have a transfer agent to meet the exemption requirements. So when the SEC always mandates my service, it's even a better option than having to go out and get my own clients. So there are a lot of aspects, and I think one thing that we've seen, you know, for the past year in Reg A that I was a little surprised at is, you know, we've seen, at the last presenter said it, we've seen a lot of real estate deals, hedge fund deals. We've also done many private offerings in Reg A. But a lot of the opportunity being lost is Reg A allows you to issue unrestricted securities. So to date, only one company has taken advantage of that by using Reg A to go public. It was a little rocky. It was the first one, and we, you know, working closely with the OTC, we've been educating the brokers and out there about the exemption. I mean, anecdotally, you know, we want to see how it works. So Seth and I invested in Helio just to watch the process. You know, when it got effective, we called up the broker and says, all right, we want to deposit our shares. Our broker goes, what's Reg A? And we said, no, it's a new exemption, and he's had to go back to his compliance, and it took a couple of days, and we actually knew what we were talking about. So
and I do think that is something that we had to sort of explain to the broker-dealer community what was involved and how to deposit it. And so when people said that, well, there was a problem at the beginning, it wasn't a problem, it was just a matter of clarifying the process until their back-end clearing firms were comfortable with it and were open to accepting those deposits. On the flip side, I think that there are other issues that we still need to educate some of the clearing firms and the brokerage firms about. So for example, if somebody is going to purchase $100 worth of stock and the clearing firms to accept that certificate are going to charge a $1,000 deposit fee, that's going to be an issue. So there's still, I think, a couple more issues that need to be addressed on the process side of the deposits and of the brokerage firms. But these are things that we learned as we went through it, and I think we're going to have to experience it as we go through the next.
Yeah, I mean, one fascinating thing, you know, and it's about educating the companies as well, and that's why we're always happy to come out to speak at these events like this. You know, companies want to go public, whether it's the right business move for them or not. There's a lot that goes into being public. There's a lot having your shares listed for trading. You know, getting listed on the OTC is one step. There's also, you know, a hurdle that many people aren't familiar about is getting your securities DTC eligible. So for those who aren't familiar, DTC provides the electronic backbone to all the marketplaces, all the clearing firms. They all transact through DTC. So if your security is not DTC eligible, you still need to run with that paper certificate to your broker, and it takes weeks and it takes a lot of time for that certificate cleared and put into a brokerage account. So what we've been able to do and what we've done over the years is help companies get DTC eligible. There has to be a participant involved. And were we involved with Elio? I think we've helped a couple of companies get DTC eligible using Reg A, allowing you to then electronically transmit the securities directly to a brokerage account. It's a little more complicated than that. The brokers have to be involved and things like that. But that's just another hurdle that we're often involved with in educating the companies is what is this DTC? How, you start throwing in all sorts of other acronyms, DWAC, DRS, depending on what you're involved with, you may or may not understand, but these are all different mechanisms to get your securities out into the marketplace.
And that's a good point to note is that there's only one company that's made it to the other side that's actually listed now, but that's not to say obviously there aren't many other successful companies that have raised money and in fact are DTC eligible. Virtuix, Track, I think, are companies that there are other companies that are not yet listed that don't have a symbol by choice. They don't have, at this point in time, an interest in listing. Not that they've tried and couldn't. And the company has to be right in its business model at the appropriate time for it to go through the listing process. But there are ways that they can gain the DTC eligibility prior to the listing process, and we can help those companies if need be.
So hypothetically, just explain. So if you're DTC eligible but you're not listing, at least your shares are already sitting in a brokerage account. They're not sitting in a paper form or on our database. It's simply, they're already in the brokerage account. So when the company does decide to go public, the shares are already ready for the marketplace. So that's one major hurdle, even if you don't list. And there's listen, there was a lot getting involved in explaining what Reg A is to DTC, but one thing we have seen is the SEC's been very receptive, very helpful. DTC's been very receptive, very helpful, and they've kind of welcomed this marketplace because they are looking for another avenue to raise capital. I mean, the crowdfunding from socioeconomic standpoint is fascinating. Instead of going after one institutional investor to raise $10 million, I'll now go to 5,000 individuals who are sitting in their pajamas looking at Facebook, and I'll be able to raise, $1,000 from each of them, get the same marketplace. But on that note, and is it up to the next slide? There are other challenges. You have to deal with delivering the securities. You have to deal, fascinating about Elio, and I love talking about the experience because no other transfer agent can talk about that experience. As soon as they got listed, I happen to, I teach a class, I'm a professor, undergrad, and it got listed, and all of a sudden, my email, my phone started blowing up. I go, what's going on? What happened was all the shares were now eligible, and all the investors saying, all right, my shares are eligible, I need to get into broker. How do I get into broker? And it's about figuring out the right process and the right mechanisms. So we actually, pre-advanced for Elio, made sure they were DRS eligible. It's a lot more complicated than DWAC, than other mechanisms. But each of the shareholders had to talk to their broker, and they had to arrange for those shares to come in. Now, mind you, fascinating thing, a lot of these shareholders, the crowdfunding community, before we talked about Reg A, we talked about Reg crowdfunding, they were used to Kickstarter, or they were used to other platforms where I would donate money or I'd give money and maybe get a t-shirt or a new waffle iron, whatever they were selling. Now there are people who have their investments tied up and their retirement savings tied up into this money, and it's not just to get a t-shirt, it's how do I get these securities and how do I get them into the brokerage account, and what is the liquidity event, about going public.
And for those of you that are contemplating doing Reg A, that's an important component to understand that you're dealing, or ideally you'll be dealing with thousands of shareholders, most of which are not too sophisticated. That's not a knock on them, they just haven't had an experience, and they may be buying your stock because they love your particular brand, your particular product, and this is a first-time experience for them. So questions come up all the time that you really need to do a lot of hand-holding. The OTC was really good with this in terms of, being patient with the shareholders. We get calls, you can imagine with 7,000 shareholders of Elio, we get calls literally every day, all day, and the questions sometimes are as basic as, how do I open up a brokerage account? Do you have any recommendations of, you know, how do I open up a brokerage? You know, some of them say, hi, I'd like to sell my stock. And I'm like, well, that's not something that I do, but I can introduce you to where you need to go to. And so you want to make sure that the transfer agent, whomever that may be that you go to, has a very large processing staff to be able to accommodate, because the transfer agent is certainly going to be a reflection on you. We had one company that was contemplating going public, and they expect, everybody expects high hopes, they expected to have 500,000 investors. So they were contemplating building an internal infrastructure to accommodate shareholder inquiries, because they expected all these non-sophisticated shareholders to be calling up with day-to-day questions. So that's just something you want to keep in mind, the scope of questions and the scope of need that the shareholder base is going to need and request, not from you, but that's something that's going to be given over to the transfer agent they choose.
Yeah, I mean, and that goes on to, once you close your deal and you have those investors, there is ongoing maintenance, there is ongoing handling. I mean, it's one thing to have a private company, maybe you have a few investors, 20 investor friends and family, or a couple of institutional investors that you work with. Now you're dealing with a larger investor base, and all those issues that come up about shareholder meetings, getting approval to do things, that's all things that you need to communicate. And we've seen a couple of Reg A crowdfunding deals that have gotten side-railed, because while they may not be sophisticated investors, they are, for the most part, sophisticated when it comes to social media. So we've seen people who, you know, we were involved with one transaction where we know that the person who was handling the back-end escrow, there was a problem with the banking arrangements, and you know, I think they took money from investors twice by mistake, and they were in the middle of refunding it, but right away, you know, of course I was an investor there also, so I'm just nosy, and right away I saw on Facebook that people were complaining that the whole thing must be a scam. Well, no, it wasn't all a scam, but there's a lot more hand-holding. You know, we get calls from investors all the time. You know, anecdotally, you know, I actually just got an email this week from a shareholder that says, I invested $600, but I can use the cash. Can you just send it back to me? And, well, it doesn't actually work like that. And,
versus the guy that called us up on I think, one of the following days of trading in Elio. He's like, what kind of scam are you guys trying to pull? Sir, how can I help you? He's like, I bought this stock at $10 a share, now it's at 25. I want it at 10. I'm like, let me explain to you. When it goes up, that's a good thing. No, I paid 10, I want what I paid for. So I'll be happy to take the extra 15 off of it. And I can't make that stuff up, but those are literally the types of shareholders that we deal with sometimes.
You know, and we get, and it's important that you kind of have a communication mechanism, and we get questions, and we help the investors as much as we can. But, you know, we're dealing with one that has an online platform. They said, well, I try to log in to get my, you know, I said, we're not actually running the business. If you have a question about your stock, I'm happy to help. But, you know, what the business plans of the company are, things like that, you have to go to the company itself for that kind of communication.
But that's not to say you don't want, you know, tens of thousands of shareholders. I mean, in an ideal situation, the function is to have a large base to go to. And we have companies that come to us and they'll say, well, I do want to raise money, and I think crowdfunding is a great solution because I have, you know, 2,000 Facebook friends. I don't think that's really going to be the solution for you. You know, we have a client that does have 50 million Facebook followers. That already is an audience that's large enough to take advantage. If you have a tremendous marketing arm, whether it's with Darren or with other providers, you really have to have a following in order to make this process work. Just to say you have a couple friends on Facebook or a couple of followers, that's not in itself going to be the solution for you.
But I will say, just to argue with Seth, even if you're not doing your crowdfunding, you're not doing, Reg A is just another great tool for you to raise capital. Even if you don't, you know, and one thing that the marketplace learned with Elio, there has to be a good mix. You can't go fully to the crowd because then you have kind of we had a marketplace where there was a bottleneck because the shareholders couldn't actually get their shares into the market quick enough. You know, you do have to have a balance of your, you know, your more sophisticated investors who are able to kind of take charge of the market. And whether you use crowdfunding or not, Reg A is just another tool in the toolbox for companies to go out there to raise capital. And to the extent, crowdfunding works, Reg A works, 506 works, it all depends on what works best for your company and how you're going to utilize those opportunities. Do you have anything else to say? We're happy to answer any questions if anybody has any.
What are you optimistic about for 2017?
We've seen some hiccups in Reg A. We've seen some companies with a lot of expectations. I mean, here's, I think, where a lot of the problems were from my, armchair seat. A lot of people say crowdfunding, Kickstarter, wow, I can go out there, I can make, and everybody thinks, well, I have a great idea, let me just throw it out there and all the investors will come. That's not really realistic. The platforms have been developing. The lawyers out there, what's fascinating is, there were experts on crowdfunding before the SEC even passed rules on crowdfunding. Everybody was an expert. There's lots of people out there that hold themselves out as Reg A experts, never have done a Reg A deal. Lawyers, accountants, all across the board. All sorts of platforms are out there offering their consulting services without ever actually having done a deal. I think the industry is maturing. I think some of those people are falling to the wayside. And I think the companies are really, and you've always had this if you've been in the securities industry. I have a great idea. I just need to raise $50 million. It's like, great, I don't have an idea. I need to raise $50 million also. This is just another tool. I think, the crowd's starting to look, all right, it's not just putting up a Kickstarter campaign and hopefully I'll come in. If I want to get Reg A, there's legal involved, there's accounting involved. It is a real offering. It's a real mechanism to offer securities to the public market. I'm hopeful that, we move away. I mean, listen, real estate and the financial industry have been very big because they're kind of the most sophisticated players out there. They've always been raising investor funds and, and getting money for their projects. Now they're just finding Reg A, they're able to use the marketing aspects of it and things like that. I'm hopeful that as the lawyers are out there learning how Reg A works, as the accountants are out there, as the financial advisors are out there, they're able to start figuring out how the market works and what works best for the companies. So I do believe, given time, it'll develop more, and you're going to get more of the companies who should go after that money. Fascinating stuff. I formerly worked in a law firm. I worked in a firm that specialized in pipe funding. And for those who aren't familiar, private investment, public equity, that's a pipe. I went to a pipe funding conference and there was somebody there. Yeah, he was looking to raise money. He's in the pipe industry. He was manufacturing galvanized steel pipes. He figured that was a great place for him to show up. I said, no, it's just another tool. And again, a lot of it's about educating the marketplace. And we think as the market does get a little more recognition, as we say, all right, I can't just say I'm crowdfunding and all of a sudden I'm raising money. We're getting a little more sophistication. I think it's going to develop more over time. Yeah.
So, and the next successful rate, how long do you think it will take to get shares deposited that are tradable? Do you think it'll be a significantly different experience?
So again, and this is where some of the lesson. I think it'll go quicker, but at the end of the day, it depends on your shareholders. Because, and this is one fact, everybody thinks, oh, you can just put it in my brokerage account. And here's a little secret on how I can't actually physically place the securities in somebody's brokerage account. The way the mechanics work is the broker has to go out on the system and request it. Once they request it, I can deliver it. So you have to have a shareholder, who has a brokerage account. We had plenty of shareholders who never had a brokerage account. And the shareholders say, well, I have an E-Trade account, just put it in my account. I can't just, you need to have E-Trade put up the request and get it. So that is kind of where the bottleneck was. You get effective, unlike an underwritten IPO. When you have an underwritten IPO, you have the underwriters who already have the brokerage accounts for all their investors. We deliver, 10 million shares to the underwriter, and the underwriter just puts it all into the individual brokerage accounts. Here you're not dealing with an underwriter. When you're dealing with a crowdfunding platform, you're dealing with X number of individual investors, which is why it's great that many of the brokers have put up their own platforms, because now they're able to take care of that bottleneck. They're able to get the securities, and to the extent that we've gotten companies DTC eligible that haven't gone public, we've given those shares to the broker, and they've already allocated those shares. So that's kind of how the mechanism works. It goes to the level of sophistication.
So can you give us a little bit of comparison of how, from a traditional S1 versus a Reg A onto being listed? Because you approach the topic of DTC eligibility, like 15C to 11 or anything like that as it relates to CUSIP number, and then getting them transferred into DWAC, whatever.
Sure. So the 15C to 11 is all the same process. That all it's getting eligible. There's no different mechanic to getting your security eligible. And just the CUSIP number. Any company to be DTC, any security to be DTC eligible has to have a CUSIP number because that's just how they track the securities. It's all based on this number. They can't be bothered to actually learn the name of the company. So it's all based on every security has its own identifier. That hasn't changed. What?
It's an S1 or
it's an S1. I mean, it's an S1. It's when it's an S1, if you're doing a hypothetical underwritten offering, it's easier. The underwriter takes care of it. I don't have to be bothered with it. If you don't have an underwriter, then there's a little more hand holding. You have to get somebody to file the 15C to 11 who's eligible to do so. You need to have a market maker. You have to go to DTC to have somebody submit the application. They have to be a DTC participant. So we've gotten to, we've been involved in this for a while. What website do we have? DTC eligibility.
DTCeligibility.com.
So even before crowdfunding or Reg A, we've been involved in DTC. back, and it's been. I actually mentioned to somebody this week when DTC was putting chills on stocks and things like that, and they haven't done that in a while.
You guys are really go-to.
We would deal, and I'm happy to say, we have a great relationship with DTC. We actually had, we had one client who their underwriter messed up. They weren't eligible for electronic trading. We worked out an arrangement with DTC, and we had one of our employees deliver a stock certificate to DTC. When they opened up in the morning, they automatically credited the account for those securities rather than holding up the red tape just because the underwriter forgot to get the company DTC eligible, and they already announced their closing for the marketplace. So all that hasn't changed. All those requirements are the same. It's just the expectation in the market that's changed. It used to be you're dealing with an underwriter. I'm dealing secure. I'm delivering the stock to Goldman Sachs, to throw out a name. Now, how do I go through that process? But now instead of one underwriter, I have 6,000 individual investors, and you just have to adapt what the current market reality is to the way the traditional mechanisms work until the traditional mechanisms modify. And it takes time. They haven't done that. Listen, I'm very happy to say OTC was the first marketplace that modified their rules and requirements with regard to reportings to make sure companies were eligible who were doing Reg A. The other markets haven't done that. And hopefully over time they will see it's still a viable market, still a viable mechanism to modify their listing standards and things like that to make sure you are eligible.
So I'm curious, with unlisted securities that you get DTC eligible, we're finding that the custodian or the clearing firms still don't want to accept those because there's no public market for them. So to even accept the shares, they don't want to list it on their statements because they'd have to put NA. Are you finding that changing in the marketplace? Are you finding some custodians or some clearing firms more open to dealing with that?
So the problem is, and it's another layer of regulation, they're dealing with FINRA, they're dealing, we thankfully don't deal with FINRA. We're regulated by the SEC, we deal with the SEC, we deal with our SEC orders, and that's more than enough for us. There's just more requirements. Listen, there's a lot, and there's a full spectrum of broker-dealers. You have broker-dealers who don't take penny stocks, you have take some that do. You have some broker-dealers who won't take restricted securities, others will. Some will take certificates, some won't. It really, and one thing that we learned when we were educating, at Elio, we were educating the market, the way that the broker-dealers works, if you're dealing with a national firm, let's call it an E-Trade, a Scottrade, something like that, each office, individual office, can make their own decisions as well. So there is no, and again, I think it's just a matter of the more it's out there, educating the market, and it's just a matter of time until what works for them. And listen, penny stocks have been around for a while, still not a lot of firms taking them. You know, it's just all compliance hurdles and what they're willing to do for their business model.
You have AML issues?
I have EML.
AML.
So we don't deal with that as a transfer agent. That's usually dealt with at the platform, the broker-dealer level. We do have requirements where we run our databases through, we run our shareholder databases through, you know, the OFAC, you know, the foreign shareholders, things like that, to make sure we don't have too many terrorists that own stock in the companies. If we find a terrorist, I'm not sure what we do with their stock, but that's a separate issue. But we don't have the AML or the know your clients, you know, know your customers, things like that. I don't even know the acronyms, because I don't have to be bothered with it. But that's not something that the transfer agents deal with.
I have a question that comes up all the time in our market, is that what's the process and how costly is it to get DTC eligibility? Maybe talk a little bit about that, because we kind of glazed over that before.
It's roughly around a $10,000 process. That includes a application fee, which is a couple $1,000s as well. Timeline is, it can take anywhere from 3 days, if it's a smooth transaction, to 2 weeks. But if it's just for what it's worth, if the company's going to be listing on NASDAQ and there's an underwriter involved, then that DTC application has to be done by the underwriter. If it's a company that's going to be listing on OTC and there's no underwriter, then that's something that we, or any DTC participant, can assist in. But generally speaking, it's a couple days. Average, call it about a 10-day process. It's about a $10,000 fee. So that's one time.
So to get really technical, once you're DTC eligible, all right, that's one level. That means DTC will now take your stock certificates. Next, you want to be DWAC eligible. That means you can send an electronic delivery directly to DTC. That's a simple process. Once you're DTC eligible, the transfer agent could apply for DWAC eligibility. We submit a simple request, and we usually hear back for DWAC eligibility. It could take a week or two as well. Then you want to be DRS eligible. DRS eligible is more of an automated system where the brokers can pull it off of the account. It's slightly different. It's another electronic account. That one, we can make the request and you're DRS eligible usually the next day.
Do you get DWAG without some kind of volume limitation or you know, some kind of volume?
So there are no written rules that we've come across, but just from experience, there are some general line items that we've seen, companies that have tried it and have been rejected because of it. They do like to see a bid and ask. If the company tries to submit a request without any, it often gets rejected. They like to see that there's a minimum of 100,000 shares that have been deposited into the system. Companies that have tried with less have been rejected. Again, not necessarily for that, but these are general rules we try to live by. If there's been any kind of recent very large split, like off the charts, that's something that always raises a red flag. And then price-wise, I think anything that has been submitted less than 10 or 20 cents is not likely to go through. So those are some of the, yeah, for DWAC. So those are some of the parameters that we generally like to advise clients to look out for.
But that's once you're listed. You're saying you're getting DTC eligibility before you get listed. So what's
His question was DWAC.
Okay.
And DTC eligibility has nothing to do with the pricing.
Oh, okay, I get that.
Yeah.
Yeah, because you're usually getting DTC eligible before you even have a market
Right,
price.
so what's running into any kind of issues there?
On the DTC side, we've got it down to a pretty good formula. There's no real secret sauce other than presenting the package to DTC in a very specific format with all of the documentation that they like to see. Sometimes they'll require an opinion letter. There's a very specific language that they like to see in it that we can give to you. But it's pretty straightforward if you know how to package it with a pretty red ball on top.
I mean, DTC prides themselves on being opaque. They don't like, you know, we're trying to get right now a warrant eligible in their warrant program, and we say, what are the guidelines? They don't like giving out guidelines because they like making the decisions afterwards. Well, you don't meet our guidelines. Well, which one did I meet? Well, that one. So they've always been kind of a black hole, but we can do it well. All right, thank you very much for your time. Thank you very much for your time.
you so much.